and shipping into the future. Good morning, everybody. Happy Monday. It's July 29th, 2024. Great to be with all of you today. My name is Bob Lang, and it's time for our Daily Bites. We bring comment to you every Monday and Thursday morning, roughly about 8:30 in the morning. Talk about the markets, talk about the Fed, talk about inflation, volatility, anything that's on our minds that can help us make us more money and make us better traders as well. So great to be with all of you today. Thank you for joining with me. So let's talk about things here. So lots and lots of volatility we had last week, right? Thursday was a day for the ages, right? Dropping 30 handles right away, rallying 100 handles by mid-afternoon. A little bit later on, we start falling, and we drop another 90 handles after that. So down 30, up 100, down 90. All in a day's work, right? So this incredible volatility continues to move on here, and I think a lot of uncertainty going on within the markets as it relates to earnings. Our stocks pricing in good earnings already. I think that's a worry that is very valid in the markets right now. We saw a big drop in Tesla and Google last week. We have a lot of big earnings coming out this week, which include Apple and Amazon. We'll get to that in just a couple of minutes. But I think there's a little bit of a worry out there that maybe stocks have gotten ahead of themselves. And we did see a little bit of a pullback, a retrace of some of those big names over the past couple of weeks. It seems like a lot of stocks got ahead of themselves as they, like to say, over their skis at the early part of July, and they've retreated quite a bit. Some stocks down as much as 15-20% from their recent highs. So we'll talk about that just a couple minutes, and then also on Thursday. As it is, markets did rally nicely on Friday into the close, and we have a market rally coming out early this morning. We see the S&P futures up about 31 handles, NASDAQ up nearly 0.8%, up about 166, and the Dow up almost 0.5% as well, too, back above 40,000 this morning. So, look, the thing about it is that with the market volatility the way it is, we're going to see big ranges, right? And that doesn't necessarily mean the market's going to go down. It simply means that instead of going like this, we're going to be like this. And when we drop, we tend to feel a lot worse than we do when we go up, right? Probably feel about 10 times worse when the market is falling more than 1%, maybe 1.5% than we do than the joy we feel when the markets are rising, say 1.5%. So, of course, a big string of those gains makes us feel a lot better, gives us a lot more confidence. We often see volatility starting to recede. Now, we see the VIX closed on Friday at 1639. If it closes below 1636, that's going to be a VIX spike peak buy signal. Thank you, Larry McMillan, for that. We'll have a buy signal on it, but we didn't quite close there. We closed at 1639 on Friday. Close but no cigar, but we're almost there. So perhaps the news later on this week is going to push us in the direction. Now, let's talk about the news for a minute. What's happening on tomorrow and Wednesday? A Fed meeting, right? There's only 4 Fed meetings left to the end of the year. We have one this week. We have one in September, one in November, and one in December. By and large, the Fed is unlikely to move interest rates tomorrow or Wednesday when the Fed decision policy is being made. But it's very likely they're going to start having a conversation or a discussion about rate cuts later on this year. And whether it's 1, 2, or 3, we really don't know. The data is probably going to tell us and tell them how to proceed. They've been talking about the data being so important for months and months and months. And there's no reason why we shouldn't follow the data as well, too, and follow the lead of the Fed. After all, they're the only ones who create policy. It's not Congress. It's not the President of the United States. It's not any of us. It's one body called the Federal Reserve that sets interest rate policy for the banks and for the rest of the world, okay, for the United States. So we have to trust them and believe them and follow what they're following as well too, so we can get in sync. Now, the Fed funds futures market always seems to get ahead of the Fed, trying to anticipate what the Fed is going to do, get ahead of it and start pricing in more moves than they're probably willing to commit to. Now, the Fed has come out and said in the last couple of meetings and in the projections from back in June, they're likely going to do one, maybe two cuts in 2024. Now, the Fed funds futures market is pricing in about 2.5 rate cuts. So ahead of where the Fed is. Now, of course, remember earlier this year, the Fed funds futures market was pricing in about like 6 or 7 rate cuts when the Fed is like saying, no, we're not even there. So that's why we had that big retreat back in April. But in any event, we'll be paying attention to what they say in the statement on Wednesday. We'll be paying attention to what Chair Powell has to say in the press conference as well, too. Big week of earnings coming out. We had McDonald's out this morning. It's rallying a little bit off of poor earnings, but maybe perhaps the bad news is already priced in there. Later on today, we'll have Sprouts, F5, Lattice Semi. Tomorrow morning before the close, we'll have SoFi, PayPal, Pfizer, Procter & Gamble, which is an interesting one to me, Merck, JetBlue, and then tomorrow after the close, AMD, Microsoft, Starbucks, Arista Networks, Pinterest, First Solar, Caesars, and many others. And then, of course, Wednesday is Boeing in the morning. We have some of Boeing, Altria, Humana. Now, last week was a big one for us with 3M, right? Anybody remember this one? So 3M, we bought. Let me show you what we did here. So you can see on Thursday afternoon, small ad on 3M. August 101 calls at 5:45, and then right after the open on Friday, we sold some of those at 17 and rolled them up to the 120s, and those are actually up about 80% as well too. So that was a huge call for us in the service, and then also in the EO service, and also in the chat room. So if you're not in the chat room, you're not getting this good stuff. So just an FYI. What is the chat room all about here? You can see a lot of people posting already in the morning. Myself, Mike Rosales, John Brune, Balaji's there, Christopher's there. So Eric, Dale, Mose is there too as well too. So we have a lot of good stuff that's being posted in the chat room all day long. Come join us. All right, and later in the week, of course, we'll have Amazon, Apple, Intel, Coinbase, DraftKings, Roku, all on Thursday, along with Block. And then on the last day of the week, we'll have ExxonMobil and Chevron and a couple of other smaller names as well too. So it's a busy week, right? We not only have that and the Fed meeting, but throw on top of it a big jobs report, labor report from June. We're going to find out what the jobs report is all about. I want to reference something as well too on the charts. I want to show you a couple of things. First thing I want to show you is the comparison of the Russell 2000 to the S&P 500. This is something I talked about on Real Money and the Street Pro portfolio last week. So the red line is your Russell 2000, right? And you can see the separation that started in spring here in April and May. The Russell was really underperforming while the S&P 500 was performing well. And you can see how that division started getting wider and wider until most recently when the Russell 2000 caught up. Now, we talked about this. I wrote a report about this and said either the S&P is going to have to fall down to the Russell eventually, or the Russell is going to catch up. But much like here, when the Russell was outperforming back in December of 2023, right, it came back down to meet the S&P 500. So when it gets stretched like this for a long extended period of time, they will come back together again, because there's a little bit of correlation there. Not a strong correlation between small and large caps, but the interesting thing here is that since the middle of July, since July 11th to be exact, the Russell 2000 has way outperformed the S&P 500, and it's still outperforming it today. And you can see the separation there between the red line and the black line is very evident here. So is that going to continue? It could continue as long as interest rates stay down. when interest rates are on the rise, we see small caps performing horribly. The IWM, the Russell 2000, does very poorly because higher interest rates are bad for small caps, right? So as long as interest rates come down, and they're down a little bit this morning, and they're on their trend down. If we close the 10-year below 4.15%, that could come with some dovish comments from the Fed this week. We could see small caps making a run at the all-time highs. All-time highs about $230 a share on that. So I also want to show you the oscillators here, the NASDAQ oscillator, which hit a huge high level earlier this month, very, very high level. I'm sorry, the NASDAQ high-low index, not the NAMOT, but the NASDAQ high-low index hit a 460 separation here. Now, here's the NAMOT, which also hit a really high level, about 360 on the oscillator. Looks very similar to that last chart that I showed you. It retreated in about 4 to 5 days right back down to the zero line and bounced off of that. So we are not overbought here. We're moving into overbought territory on the short term. A couple more days of that, we're going to be overbought. But if we get back into that 200, 250 range on the oscillator here, it's time to take some money off the table. So we could get a rally going in the next couple of days and see this oscillator move back up. But I would be cautioning you folks for staying too long on this market over here. We do have a lot of earnings coming out, and some of them could cause the markets to take a hit. Microsoft coming out again tomorrow, AMD as well after the close, and Meta on Wednesday could shake up the markets a bit because we did have some big cap stocks like Google, Alphabet, and Tesla delivering some poor guidance, and caused the markets to really implode on Thursday, right? On Wednesday and Thursday. So let's see what happens there. So a couple of names I'm looking at right now. I want to share those with you. Let's take a look at VRTX. Earnings coming out later on this week. This is one I've got on my radar. Vertex Pharmaceuticals. Really, really nice uptrend. The stock is really moving well. I think maybe a move up past 500, maybe up to 550. Regeneron is one that I've been on for a while. Had a pretty good day on Friday. Big reversal. Really can't get past 1100 over here, but I think with earnings catalyst coming out later on this week, this is a stock you got to take a look at. If it gets above 1100, it's going to move past 1150. Also, Lilly, which had a really horrible month of July since the 12th or 13th. It's come down quite a bit. It's down to this 100-day moving average. I think this is a good spot to add some shares or possibly add some contracts of Lilly. Always expensive because it is an $800 stock. And then let's see, what else was I looking at over here? Sarepta, SRPT is one. Had really good news. I have some stock of this one. Had some really good news in June. It's backed off a little bit over here. They do have earnings coming out later on this week, so this will be one to take a look at as well. And then lastly, Garmin is good. Stock has earnings coming out company has earnings coming out I think on Tuesday. Take a look at this one. A huge breakout on Friday on good volume as well too. So this stock is this one that could get to 200. And then I'm also a big fan of Amazon. I know it's the chart's been kind of challenged here, like much of the rest of the Mag 7 or FANG stocks. The stock is down about a good 10% from the recent highs, about 200. Couldn't break through that 200, but I think earnings are going to be real strong, and they're going to give some good guidance. And if we can get above this 190 level, 192 level, it's going to take some effort to get there. It's not going to get there overnight, but it's going to take some effort to get there. If we can get above there, I think there's some blue skies ahead over the next couple months for Amazon. So that's going to be it, everyone. Have a great day. Have a great trading day tomorrow as well too. Don't forget the Fed meeting is on Wednesday. We've got some data coming out later on in the week. Don't forget to listen to the podcast. I'm going to be recording that with Lindsay Bell tomorrow. It'll be out on Thursday on advisorpedia.com. Advisorpedia.com is a new place that Chris Versace, Lindsay Bell, and I are are located at, and we're recording a podcast every week in the morning, or and it gets released during the day on Thursday. It was the second most viewed video or article written on Advisorpedia last week. So it's become very popular, and we hope you get a chance to listen to it this week. So again, just Lindsay and myself will be recording that tomorrow, and it'll be out on Thursday. Have a great day, everyone. Appreciate all you spending a little bit of time with me. We're going to have a good week here. Again, don't forget, end of the week is the jobs report. It's also the beginning of the month for August. So look for some window dressing coming in on today, tomorrow, and Wednesday into the end of the month to try and finish this month positive. Okay, appreciate all of you spending time with me. Go fly like an eagle. See you guys all Thursday.